I think what we've seen so far, I mean, things can always change, but we see that
Yeah.
Washington saying, can you give us more oil? And I think the response from the Gulf is, well, wait a second, aren't you the president of the country with the largest oil production?
Yeah.
What about your domestic? And that's been just left out of the conversation, just the focus on OPEC plus. I think for the countries, I mean, they know that high oil prices in this period of time are not good for them because it damages the market. Obviously, these prices bring in revenues. And there's a message about, what do they say about tightness in supply, and that anxiety is mounting in the market.
In terms of that production and then the investments that are required in order to keep up with demand, I guess is the question. Do you have a sense that these international oil companies, as well as these producers, are behind?
I think what I've started to call it is preemptive underinvestment. That in fact, clearly not investing enough. There's a pressure from their investors is, to draw back, be more careful, capital discipline. And, but you add it up and world demand is going to be back where it was in 2019 in the next few months. And demand will continue to grow, so you will need investment. So there's a kind of disconnect between the realities of the dynamics of the market and what's happening and kind of the policies around it and the expectations.
So we should be worried then?
Well, I think that we should be conscious that one of the things we may see is a series of crunches, particularly as they try and move the 2050 goals into 2030, that there will be a kind of a rebound and that you'll get these crunches. And then the question is, what's the political reaction to it?
Yeah.
Right now, you can see the administration and the Democratic senators are really alarmed in the United States about gasoline prices and what that's going to do when people go to the polls.